This is our Forex blog for January 4th, 2011. One of the best ways of trading is using our currency meter to find the strongest and weakest pairs. In a best case scenario, the real-time trend, as you can see on the top, matches up the weekly and monthly trend below. But once a currency moves too far statistically one way, it tends to have a counter trend day, and that's what you find today in the dollar. So when you see extreme strength in the dollar, you want to trade that against one of the weaker pairs. You can clearly see the Australian dollar was extremely weak, as was the Swiss. So you want to sell the Australian dollar today and you want to buy the dollar Swiss. It's that simple. Here's the Australian dollar, and last night you can see it was underneath the hourly. Failed to go above the hourly. It was underneath the hourly yesterday. Good place to sell. When it breaks above the hourly, then fails and comes down, great place to go short. And at this point we have extreme weakness. This is our trend explosion system. Broke down underneath the 10-day moving average right here. So you might have went short right here with your stop above here. It took about an hour before it finally went lower. And when you're underneath the lower containment band, don't expect big moves. So I'd be looking to get out of that trade here, and I wouldn't have probably taken that trade here. We have a perfect example of our Elliot two-wave fib pullback system right here. Extreme weakness down, moves up a wave, the second wave, especially when you're at the fib targets, and the 10-day moving average helped. There wasn't as much strength on the way up as there was weakness. Great place to go short, and took it really a few hours before it finally broke down. You might have only made a few pips in this trade, and then you took another breakdown to the sideways rectangle pattern here and made 25 pips. Pullback trade right here led to another 50 pip move. Here's the dollar Swiss. Again, extreme uptrend today. It's above the hourly right here. Last night you might have bought this little sideways rectangle breakout, and then it hit the previous day's high. And on the second chance, when it came up here, there wasn't as much weakness on the way down as there was on the way up. It breaks out here, you go long, and your profit target and the weekly pivot levels where you would have got out of that trade. And I wouldn't have continued trading it long on the upside, because once the currency goes above the upper containment band, usually it reverses. So I would have missed out on this additional 30 to 50 pip up moves. But the first time you see explosive strength like that, you might have bought this little pullback here and here. But after that, after 6 o'clock, I wouldn't have traded it anymore. Let's go through each of the currencies and find some other opportunities. Euro dollar has this fib level right here. The weekly and monthly trend's up, so when it finally gets back above the hourly and breaks out of this high right here, you might have went long with your stop underneath here. Always draw your fibs on the previous waves because they give you great profit targets. Notice it went right to that level, then pulled back. You also have an Elliot two-wave pullback right here, it looks like. Notice it went right to the fib level. That was good for another 25 to 50 pips, depending on if you got out here or waited for the previous week's high up here. And this is also a great example of kind of a double top with a little bit of momentum before, not extreme momentum, but significantly less the second time. So you might not have shorted right here, but once it came back down and was consolidating here, and it barely made a higher high with less statistical strength, what a great place to go short. This is your first profit target, this is your second. So I would have got out of half my trade right here, moved my stop above the sideways consolidation, and then drew my fib on this wave where the fib targets are my likely profit target. It shot through the first one, came down the second one. We have a weekly pivot, a monthly pivot there, and our trading zone. That's a great place to get out of the trade. Pound dollar, you can't really buy a currency when it's right near a fib level, but once it breaks above here, you can go long with this, and this is your likely profit target. I would have got out of half my trade here, but moved my stop up underneath the sideways consolidation on the second half, and then it shot up to the upper containment band. This had extreme strength, so because of that, on this little pullback on a tick chart, you might have gotten into a little pullback. If you're still long, you would have got out somewhere up here. Anytime it's above the upper containment band, you don't really want to buy up there, but this is also another perfect example of our Elliot two-wave pullback in action. It came down to the 1.382 fib target without that much weakness. You would have went long around 55.80, and you're in this trade. It really didn't go up too much. It went all the way up to about 5,600. So you might have made 10 or 15 pips, and you might still even be in this trade, as it does not appear to be that much weakness. Usually on these kind of trades, if they don't explode up, I usually get out with 5 or 10 pips if I'm lucky enough to be able to. Dollar CAD stuck between all these areas of support resistance, so once it breaks above here, you might have went long, and you'd have a losing trade. The second time you get into this trade and it takes off and it's kind of going sideways right here, losing some of its strength. I would have got out of my whole trade here and missed this remaining 30 pip up move, but I would have lost 6 to 10 pips on the first trade, got in again here around 55, out around 90, made 35 pips on the second trade. So that's trading in a nutshell. You're not going to have all winning trades, and some days you have less than 50% winning trades, but your losses are small, and in a lot of cases half what your initial risk is. If it goes up 10 pips, you move your stop in half. So I would have probably lost 6 or 7 pips here and then made 35 on the second one. The New Zealand wasn't nearly as weak on our currency meters as the Australian. So if you were going to trade in one of the New Zealand or Australian pairs, it would have been definitely the Australian. As you can see, the New Zealand yen is also pretty choppy and there's no statistical strength. Euro yen took off today. However, it's above the upper containment band. Anytime you're above the upper containment band, you want to look for counter trend trades, especially when the momentum up was never obscene to begin with. It never hit the dotted white line like it did yesterday. Notice this, it continued its trend. When it doesn't have extreme strength, it usually reverses above the upper containment band. A little bit of strength, even less strength, even less strength. So this, our Trend Intensity Pro totally predicted the upwards momentum dying off in this explosive down move. I would have used this as my first profit target, getting short up there around 110. So my likely profit target was 40 pips. In this case, it just exploded through there. Now we have the lower containment band. If you wanted to get out of half your trade there, I don't blame you, but notice the extreme weakness. Those trends tend to continue, and then it shot underneath the lower containment band. You probably would have exited the second half down here around 70. But a phenomenal counter trend trade, double top with divergence, and it never had a lot of strength to begin with. You see the same thing here in the pound yen, but this one is a little bit riskier because it initially was extremely strong. So when you saw that here, you wouldn't want to buy this pullback here because it's way above the upper containment band. Sometimes you have to pass on trades that ultimately give you 50 pips because most of the time they don't work. But when the currency goes way above the upper containment band, you see the strength falling off. And not only that, but you have more weakness than strength on both of these waves. It's only a matter of time before it reverses. And again, the hourly makes a great profit target. It stalled there. You'd be out of the whole trade with about a 50 pip counter trend move. Australian yen. The Australian was really weak today. The yen really wasn't that strong like the dollar was. So you would have focused on the Australian dollar. Anytime you see a double top at a major resistance area, 20-day moving average, 10-day moving average, hourly moving average, the whole number right here, a lot of reasons to go short. Once it finally breaks down, you might have made 10 or 20 pips on this. I wouldn't have expected this explosive move, but once you have this kind of weakness, you might have gone short right here and picked up about 40 or 50 pips. Dollar yen strong today, but it's above the upper containment band, and it's hitting our fib level. It didn't have that much momentum other than the 1130 move up, and so again, you're looking for some counter trend trades, and eventually it fell, just like the euro yen and pound yen did. Same thing here with the CAD yen. And the best ones to look for counter trend trades are the ones that didn't have the most strength or the least amount of strength on the way up. Look at this, almost nothing. And then from 3 to 9, nothing. So whether you look for counter trend trades up here at the high or once it broke underneath hourly here, great place to go short. And anytime you see plus 20 weakness, that trend's likely to continue. So this was absolutely home run. Even if you sold it here at 50, you're up about 100 pips in it. If you sold it up here, you made 120 pips on that trade.